All right, welcome back. We're just going to look at what the GIFT Nifty is doing and take a look at what the open is likely to be, about 100, 110 odd points higher. That's the implied open. If you can quickly run you through, because 9 o'clock we'll have the pre-open and then market open. Let's just quickly run you through what you need to know in terms of specific cues. Now, US equities have hit a fresh all-time high. That is last night. S&P 500 made its 44th high. All-time high, by the way, this year, that is in 2024, and it's quite something. Volatility in the US continues to come off. The CBOE VIX was down about 3%. Yields continue to move higher. We're at about 4.07%. That's about a 6 odd basis point jump. And as a result of the big jump in yields, you've got the dollar JPY, which has now risen to 149.5, which means that the JPY has fallen. We were talking about 140, we're now nearly 150. So that's essentially what has happened. I mean, it's a stronger dollar, stronger US. US exceptionalism in that sense is back with that last jobs data report which came through. And it's now, of course, showing through in various other asset classes. Equities, for example, which, as I said, have made a fresh high. There is oil prices, which are steady. I mean, they've been coming off a little bit from the recent highs. No fresh headlines from West Asia. So that's something to watch. Later today, we'll get the US CPI numbers, and I think that will give us a sense of if that is meaningfully different. I mean, last couple of data points have been meaningful enough to move markets. We'll see if that is the same. But that's the next one. That is later today, tonight, when we get the data. Just to circle back and to tell you the levels here. So yesterday was peculiar because you had a surge, but there was a brief surge. At one point, the market was up 200 points, and then there was a complete collapse which happened, and we ended flat to actually even slightly lower. That resistance came in at the almost exactly a couple of points within distance of the 40-hourly exponential average. So that's essentially where the market sold off from. I'll look at the sort of lower levels first. The point is, as long as the day before yesterday low on the Nifty and the Bank Nifty, which is for the Nifty 24,694, remains unbroken, I mean, we can see up moves which are possible still, and that they will sort of happen. The question is whether it is durable, whether it is temporary. That we'll have to figure out as we go along. And I said this yesterday as well, that don't get too excited. A repair takes some time. Further upside levels after we cross the 40-hourly exponential average is 25,485 and 25,673. These are simple retracements of the fall from the all-time high to the recent low day before yesterday. So those are levels for the Nifty. For the Nifty Bank, upside levels are 25,000. I mean, similarly, the Nifty Bank also, by the way, sold off from the 40-hourly exponential average yesterday. I'm not repeating that. Resistance at 51,606, which is the 40-hourly average. The changed one now as of yesterday, and resistance now after that comes in at 52,330, which is the 50% retracement of the fall that we have seen. And of course, lows from day before yesterday should act as a support as well. Hopefully, we don't test that even as the market takes some time to find its feet. The implied open is up on your screen. Surabhi.
Well, absolutely. And most of the markets in Asia are actually trading positive, and that sort of gives context to the implied open 100-point move that we're seeing. There's a rebound in China. I usually start by looking at that market, these days. So China is up a little bit. The Hong Kong market's rallying about 2.7%. China is also up just under 1% or so. In Japan, there is some fresh sort of data, macro data that's come out. The inflation print there keeps accelerating. And remember, the Bank of Japan hiked and then they had to go on pause because the Fed started cutting. But therefore, inflation trends are important to track over there. The PPI number, producer prices, up 2.8% in September. Higher. The pace of growth is higher than what we saw in August, which was about 2.6%. On crude, I just want to add that, if you want to call it, it was a minor headline that kind of came in because the world is still at, waiting on the edge, so to speak, in terms of expecting some sort of Israeli retaliation. There was a phone call between President Biden and Mr. Netanyahu yesterday, after which the statement came in from the Israeli defense minister. Now, we'll see what it really amounts to. But he said that Israel will strike against Iran, and the strike will be lethal, precise, and surprising. It was enough to lend some kind of an upside move to oil prices because Brent now is again at 77. The low when the slump happened was around 75. Now we're seeing prices above 77 this morning. So let's watch for that. Of course, we have inflation numbers in focus on Wall Street today. That's going to be PPI. That's going to be the CPI number. PPI is coming out tomorrow, so watch for that. Yields continue to move higher ahead of those important prints, 4.07% on the US 10-year. Let's talk about the situation here. The market yesterday didn't look too great because we could not retain any of the bounces. And, on the large cap screen, there was selling coming through. Even though the FPI selling intensity has reduced a tad bit. Let's pull up the FPI numbers. A selling of 4,562 crores, which is large, but it's not as bad as 9,000, 8,000 crores, 10,000 crores that we had to deal with when the entire China onslaught was really on. Domestic institutions, bought to quite some extent, 3,500 crores of buying. But disappointment, yes, because large caps could not hold their momentum. The market seems to be entering a pretty cautious phase because the biggest litmus test is upon us. There's liquidity on one side, that's hard delivery in terms of earnings and numbers on the other. And the season kicks off full throttle today with TCS. And there's anticipation that the second quarter is not going to be looking as promising. So expectations have been coming down, but still analysts point that there is a risk of downgrades by the end of this season to the full year estimates, FY25 estimates, which are ranging between 13% to 15%, that they could be downgraded. Nuvama is saying that the Nifty EPS in the first half will grow just 3%. TCS starts the season today. We're looking at a constant currency growth of 1.2%. And some of the other companies that will be reporting include Tata Elxsi, Anand Rathi Wealth, and GM Breweries. So, yep, it's down to the wire. The numbers have to show up.
Well, that's right. Yesterday's trading session, it gave a lot of promise. But from there, that advantage got faded away towards the end of trade. So let's take a look at the F&O action. Well, on the Nifty Futures itself, there was some unwinding of positions that we saw in yesterday's trading session. It seems there were some shorts that were created on the Nifty Bank. Remember, yesterday it had its weekly expiry as well. So that could have had an element as to why we did fall drastically in the last 60 minutes or so. What about positioning? Clients? Well, they in fact, let's start with the FIs first. The FIs, they were net long just a short while back. Now, in fact, they've moved to net short. And these net short positions are the highest we've seen all the way since June. The clients, well, they have turned things around. They were, in fact, earlier, they were net short, now they're net long. And their net long positions as well are the highest that we've seen all the way since June. Both of them have been on the opposite end of spectrum, and the clients have been getting it right. But having some shorts in the system is something that the bulls actually would like. The PCR continues to remain at the lower end of the range at around 0.72 odd. So let's pull up two strikes because today we have the weekly expiry that will play out. The 25,100 call, well, that was fairly active in trade. And on the downside, we have around the 24,800 put. So putting together the options data, putting together the recent highs and lows, you get your broad reference point and the broad 500 to 600 point range that you're looking at. The downside as well as the upside need to decisively break both these two levels to get further direction from here on. On the Nifty Bank, yesterday we managed to get past that 100 DMA, but we couldn't hold above that mark. So this becomes a bit of a resistance zone. You wanted to get past the 100 DMA and then, in fact, the 50 DMA as well. So that's about trade setup. I expect Nifty to be in a bit of a range, but in stocks that I'm looking at, well, Tata Chemicals, that one has been seeing a good amount of buying, delivery-based buying. It moved quite well yesterday as well, and the stock has moved into the F&O band. So I'll keep an eye out on this one. It appears that it's got some momentum going for it.
All right, so we'll keep an eye out on Tata Chemicals, absolutely. What we'll do is we'll take a quick commercial break here. We're going to come back and we'll have some specific stocks that we want to get to you. So news flow, that's coming up in a bit.